Well, the dips are getting shorter. A big rally in US shares that was fueled actually by a rally in European shares that preceded it drove markets back towards their all-time highs in trading last night. Good morning and welcome to the Daily. I'm Michael McCarthy, CEO at Moomle Australia, and today we'll be looking at the overnight action and what might be coming in the near future, because we're certainly looking at a very positive outlook after last week's sell down. Those last 3 days of last week, things were looking rough, but investors have regained their confidence, and it appears that good news is good news when it comes at the company level, and bad news is good news when it comes at the economy-wide level, because markets are now furiously pricing in potential rate cuts as soon as the next Fed meeting. They're more than certain of 2 rate cuts before the end of the year in the US, and that lower interest rate environment that they're anticipating has really fueled buying in the share market. And every one of the major indices rallied by more than 1% in overnight trading in the US. Some of the European markets bounced by as much as 2% after a rout on Friday night. So it does appear that dips in markets globally, but especially in the US, are getting shorter, and dip buyers are ready to rush in as soon as there's any potential sign of an all clear on whatever it was that caused the market to be concerned. Interesting to note, Hong Kong was actually up 1% yesterday. It was the lead market, and that's where the turnaround occurred during Asia Pacific trading. Local traders would be aware the Australian market was flat at that time, maintaining its low beta relationship with the rest of the world's share markets. But Hong Kong, the standout, the canary in the coal mine that gave away the game yesterday as it rallied in trading during our session. However, a lot of the action in the market is being driven by results, and of course there's still a focus on those mega cap tech stocks. Nvidia, Alphabet, Meta, Broadcom, all up by more than 3% in overnight trading, and no surprise that it was the semiconductor and tech sectors that led the market. Tesla was up 2% after the board announced they'd reached agreement with CEO Elon Musk on a $30 billion payday for Mr. Musk. This makes him, of course, the most highly paid employee in the world, and maintains his status as one of the richest men in the world. But for Tesla shareholders, it could be quite important, because the acceptance or the agreement around this pay packet has been a sore point for both Mr. Musk and the company. And this agreement is a sign that they've found peace and that Mr. Musk's future with Tesla is assured. And given that Tesla is so dependent on his leadership, that's a positive for shareholders as well. On semiconductors, one of the rare exceptions in trading overnight, it fell 16% despite delivering a very much on-target result. And it might be one of the lessons for this reporting season that investors are not looking for companies to meet expectations, but to exceed them. And given the lofty valuations we're seeing, particularly in US markets, that might be a sensible stance from investors. But you can see how on semiconductor has been affected. On the left-hand side of this chart, we've got the all-time high for the stock. And you can see it's been under considerable pressure despite the overall support for semiconductors. Now, the reason for this is ON is involved in providing chips primarily to auto manufacturers, and the disruption to the US auto industry through the introduction of tariffs, particularly with Mexico and Canada, given that a lot of the US auto supply chain crosses the border multiple times during the construction of a car, that demand for auto-based chips has been down, and so has ON's share price. Now, you can see, despite delivering in line and having flagged very clearly to analysts and the broader market what the outlook for the quarter was, the shares were absolutely thumped in trading. And the reason I bring this one to your attention is it's such a rare exception. With so many stocks trading near their all-time highs, it's interesting to see a chip maker that is not, and in fact fell hard in trading despite the rally in the market. Another stock that I think we should be having a look at today is Palantir. Its share price reflects a lot of the experience in the tech sector. It rarely pulls back. There have been a few on the way, but you can see on this longer term chart a very clear uptrend in Palantir's price. Now, they released their results after market this morning. In the lead up to that release, the share price drifted higher by about 4% to hit an all-time high before the announcement. Once the announcement was made and the market looked very pleased with it, the aftermarket trading has added a further 4%. So Palantir almost certainly to hit another all-time high in trading tomorrow and continuing that long-term uptrend in Palantir's share price. So it's a focus on results all round. It's a similar situation here. Beach Energy reported yesterday. Now, you'll recall that in the days leading up to this result, Beach's share price had been under extreme pressure on speculation, and I stress it's only speculation, that Beach would involve itself in a carve-up of Santos. Santos, as we know, is subject to a bid by the Abu Dhabi National Oil Company, and this cash-only $36 billion bid is the largest cash bid Australian companies have ever seen. The concern here, of course, is around the Foreign Investment Review Board and whether or not it would allow the purchase of such strategic assets for Australia. The idea that Beach might get involved as an Australian entity to help smooth this deal and possibly take the Australian assets is why Beach's share price has been under pressure, because those assets are worth somewhere between $2 and $2.5 billion, and Beach's total market value at the moment is about $1.1 billion. So it would be quite a feat to be able to raise the debt required to take on those assets. And it might just be weak speculation by traders that's driving this at the moment. But nonetheless, the good result from Beach saw it bounce after recent pressure by about 3.5% in trading yesterday. And we could see further gains today. Other results coming up. News Corp tomorrow morning our time, and AMD in tonight's session. I think at the end of tonight's US trading session, two of the features. News Corp, of course, listed both in the US and here in Australia. One of the features in trading yesterday for the local market was the gold miners. The ASX had a good day, and a lot of the support for the market came up because of support for mining stocks generally and gold miners in particular. Now, you can see that Northern Star, which is the share price we're showing here, had been under some pressure. Had drifted away with the pressure that we'd seen on the gold price. But with the gold price breaking back up through $3,400, we've seen great support for those gold miners. And you can see on the right-hand side of the chart there, the turnaround from the downtrend, that sudden move upward we've seen in the last couple of days trading. And with further gains for the gold price overnight, we could see further support for the gold miners in trading today. Something to watch out for, the tariffs that were announced last week by the White House are due to come into effect on Thursday morning our time. So one to watch out for, they'll actually hit during the Asia-Pacific trading day. And so while we are at this stage expecting a lot of last-minute trade deals, the actual introduction of tariffs might be a reminder to investors and could see a little bit of the dampening of the current enthusiasm. However it goes, whether or not we see further ramping up and dip buying in fear of missing out driving the market higher, or whether we see a pullback based on the data that will come out later in the week, it's almost certain that volatility and increased and higher levels of volatility are likely to persist in the share market.